Welcome to the Leverage 3 podcast. This is where we talk to high performers that bring you 3 tactics you can leverage today to impact your business and life. I'm Craig Shoemaker, and today's guest is Antonio Reza. Antonio was born and raised in Mexico. Then he received a bachelor's degree in business from the United States, and his work includes time at 3 of the biggest companies in the world: GE, Microsoft, I know a guy who works there, and Google. His international career has allowed him to live in 10 different countries, where he now resides in France, and he's currently head of finance at Google Cloud. Antonio, welcome to the show.
Thank you so much, Greg, for the invitation. Very happy to be here.
Yeah, that's awesome. So being head of finance at a place, a small little outfit, a little upstart called Google, I mean, you must see a lot of different use cases, a lot of different applications to your discipline working there. What's one of the things that stuck out to you most about something that maybe you ran into that you kind of never expected to see?
I think I would say the use of technology and how we apply that into the finance function. And I think that actually started more at Microsoft than Google. But I do see that here. I mean, Microsoft is a more mature company in terms of finance and how we handle financial statements, financial reporting, than Google, especially in my particular business, which is Google Cloud. But, I mean, fantastic technology, like machine learning algorithms applied on, how do we use those to forecast revenue or cost, things like that. So that was a shocker because people talk about finance transformation all the time, and seeing it applied already, that was pretty cool.
So one of the things I wanted to ask you was maybe if you could take us through a story of any time that you'd encountered where a financial issue kind of loomed on the horizon that threatened to kind of derail a company that was going really well. And kind of what did that company do to address it?
I mean, there's many, but I would say one that stands out, it was probably when I was an auditor, and it was a company that was was actually headquartered in Venezuela. And it was not headquartered. It was subsidiary of the company. And but the location was in Venezuela. And I think that I was the audit manager at that point, and they wanted me and the team to go and basically clean the house. Because before, there were no individuals that had gone to Venezuela and audit, basically all of the company in that subsidiary. So
this was a physical audit.
Exactly. So before It was more like through email, like, hey, send me this documentation and that. And it would always pass, or maybe we would find something, let's say, mild or not that problematic. But then I guess the stars aligned at some point, and I was the audit manager for that project. And then my associates at the time, they were all from Latin America. So there was no excuse of, we don't speak the language, we don't know the culture. And so they sent us there for about 4 months. And I mean, there I would start with, now it's pretty popular, the topic with what's happening with FTX, right? With compliance and whatnot. But that's basically what we did. Like, it was, first we started with the compliance checks. All right, are these guys actually following policy, right? Mm-hmm. Are they actually recognizing revenue the way they should? Are they actually incurring costs the way they should? And, I think a lot of the things that we found out, which were compliance, right? Like lack of regulation and things like that, that trickled down into the financial statements. They were not stated correctly. A lot of issues around, how do we, you could say, even embezzle certain inventory or
little creative financing going on.
Yeah. So I think that just created such a red flag and a warning. And that was, that had a risk of derailing the company and the progress of the company because of a potential reputational risk, right? If this could leak, it could be, it could have ramifications of, from an audit perspective, and we would get audited by external institutions like the SEC or things like that, or, just potentially, even a fine, right?
Right.
So I think that was the first time that I experienced something like that, lack of compliance, lack of controls, lack of even financial literacy of how things are done can pose a risk. So I think that was a big one.
Building a business is tough and even tougher when you do it alone. So why not use proven systems to help grow your business and focus your message? Now, Dan Coe is the creator's creator. His system, found in the 2-Hour Writer, helps you cultivate your best ideas. And the Modern Mastery community is there to challenge and support your growth every step of the way. I'm there, and you should be too. So go to leverage3podcast.com/co, that's KOE, and let's get you going. So when you talk about financial literacy, I think it's people who are either small business owners, solopreneurs, entrepreneurs, sometimes get intimidated by the whole financial aspect of it. People often go into business because they're creative or they're good salespeople, but then it's like now they have to handle that aspect of it. Can be a little rough sometimes. So you talked about balance sheet and income statement and cash flow statements. So how would you describe the story that each one of these is trying to paint for a business?
Yeah. So I think that's a good, segue of this, because typically if you think about a startup, the last person, or not the last person, but it's not the first person that they hire as part of their leadership team, CFO, right? It's typically more a product, chief product officer or a salesperson, because they try to scale. And then when it gets to a certain size, then that's when they start onboarding the CFO. Or now there's kind of like this new trend that I've seen, that there's fractional CFOs, where there's kind of like you rent one and you pay them based on an hourly basis.
CFO is a service.
Exactly, basically. But I would say, so I think it's important for people that are business owners and don't have that key role yet to learn what an income statement, balance sheet, and cash flow statement are. And I think in a very simple way, the income statement is basically the one that probably most people know, because it's just your profit and loss, right? So you have your sales minus your costs, and then it gives you your profit. It's that simple. And it's basically a representation of how you're doing as time goes by, right? So in January, then February, and you accumulate the revenue and the cost, and then you see how healthy you are as you progress. Then the balance sheet is a bit more complicated, you could say, because it has more, let's say, you could say it's a bit more technical to handle, and that's when typically you need an accountant. But you have typically the very simple equation, right? It's just your assets, your liabilities, and then your equity. And the way that I typically explain it to people that are not very versed in finance is just like, stuff that you own minus the stuff that you owe is the stuff you keep, right?
Right.
And then that one is at a point in time. So it tells you, okay, what was, for example, if you take cash, what was the cash that I had in the bank as of the end of the year, the beginning of the year, the middle of the year. And then finally, the cash flow statement is, which I think is the most important one. It tells you where the cash is coming from and going into. And you divide that into 3 parts: operating activities, which is basically what you actually do, the products you sell. And then investing and financing activities, which is more like loans and equity infusions. If, for example, you're a startup and you get a Series D investment, that's going to go there, right? So you didn't generate it because of how your product is selling, it's because some angel investor or a VC firm funded you for operations. And I say that that's the most important, because you can have a business that is very profitable on the income statement, right? But you don't have any cash. And that just can ruin the picture. Like the business can go bankrupt because you cannot make payroll. but you might actually have a loss. But if you have enough cash coming in, you can keep operating. So I think that's in a very simplified way, that's what they tell you, more or less.
Right. So that's the story that they're saying individually.
Yeah. And then once
what
you
about
combine
when you,
them, right?
Yeah. So together, what's the story?
Yeah. So I think, and that's the other important point. I think when I was in college, for example, I think that schools don't do a very good job in telling you how they relate to each other. Maybe they do, but at least I don't remember it that way.
You were sick that day, it's
yeah,
right.
I guess. And I think, when you see how everything ties together. In fact, I actually wrote a thread where it actually tells you how all the moving parts relate to each other, right? So you know that your cash in the balance sheet will be used to tell you what the position of the cash flow statement was. You will see that your retained earnings from your income statement will show up also on the balance sheet, the cash flow statement. Like, it's all these like moving pieces, and it can tell you, how healthy the business really is. Like, for example, a lot of people say, hey, we have a lot of cash in the bank, but then, like, did you generate that in fact because you're operating the business efficiently? Or is it more because you got, again, an equity infusion? Right. Or are you profitable because, for example, people say like, wow, the sales just grew a ton. But then if you start looking, okay, but did they grow because one account that was very big, ordered something, placed a very big order. So now it's huge. And that's why my profit is so inflated. But then the next quarter, that customer is gone, and then my sales will drop, and then my profit will shrink, right? So all these things and all these questions just have to be analyzed in, not in a silo, not in a vacuum, but together.
Right. Well, and you've said not every profit dollar is the same.
Yeah. So that one, I think it's also an important point, because the income statement, for example, or the profit and loss statement, it's divided into, let's say 3 or 4 chunks. And the first one, like, there's different types of profit. For example, you have your gross profit, which is basically your sales minus the cost of sales. For example, if you think of let's say a car business, like an automotive business, like a Ford or Chevrolet, you would say, okay, the sales is what they sell the car to the customer. That's the price. And then the cost is basically all the people that are working in the shop, the materials that go into manufacturing the car, and any overhead, right? So that gives you your gross profit, which is more of an indicator of, is your product line healthy? Yes or no? Then from there, you go into your operating expenses, which I think this is where most businesses get it wrong. Because sometimes you can, as you scale up an operation or a business, especially from a startup, and you start getting money and you scale and you hire engineers, you hire, recruiters or whatnot, the cost structure of a business can become very fat. And that drags down the margin that you work. If you had a good margin on manufacturing, right? And if you have a very high operating cost, then you can just drop the profits, and it's just not good. It depends on the industry as well. But that's where most of the efficiency should be looked at, right? Like, you should see, okay, do I have enough salespeople, or marketing people, or advertising people, or do I have too many, or do I have too many recruiters? And if you see the news, for example, all these job cuts, the first people that they let go are the support functions, right? Anybody who's not related to the product. So people in HR, people in finance. I'm not gonna lie. Hopefully we're the last people to let go, but recruiters, all those people are the first ones to be let go.
Anything viewed as like a cost center, right?
Exactly. You got it. And then finally, right, you have the net profit, but that's when you start considering other types of cost that are more like depreciation, other sources of income. For example, anything that you get from, if you invested in some securities and you get a dividend payment, that goes in there. Or if you discontinue, like in big corporations, sometimes they discontinue operations. They don't operate that business, but then you're still getting some, little lag of dollars from the contracts that were kind of legacy. And then taxes, right? And then after that, you get your net profit. So that's why it's kind of different, because people can look at that from a margin perspective, like percentage of that profit relative to sales. And they say, oh, this one is big or this one is small. But each of those tells you a different story. One of them tells you, are you operating your business efficiently, effectively, productively? The other one is, do you have a very bloated cost structure? Do you actually need all these people to operate the business? Or could you, for example, move things to automation? Could you outsource this into a shared service center in a cheaper country like India or Mexico, for example, which we do? Or, and then net profit's more like, hey, how come did I pay so many taxes? Is there any opportunity to optimize taxes here to pay less? So that's what I meant with that tweet.
Nice. So can you pinpoint anything that's occurs to you or that you see on a regular basis that's unintuitive about these practices? So it's like, okay, our costs are too high. Let's just cut our costs. But I would imagine like it's never that easy, right?
No, I wish it was. I think probably at least where I start, right? And again, it depends on the goal of the company, because if the goal of the company is to grow, typically you will have a very bloated cost structure to hire all these salespeople or marketing people because you want to expand, you want to gain market share from someone. Let's take that as an example. So if you want to grow, what you want to focus on is on that first profit piece, right? Where you're like, or am I operating it efficiently so that I have enough dollars to sustain my fat cost structure of all these sellers and whatnot. So in that case, for example, you start looking at, in a very, like if we go back to the car example, okay, my sales are this. Am I actually discounting a lot, for example? Is this more something to blame on the sellers? Why? Because, in order for you to sign a contract, a lot of the sellers will have certain empowerment policies where you say, okay, you're going to sell, I don't know, in this region in the United States, and depends on the size of the customer, you're entitled to give a discount up to 10%, for example. And there's very good sellers that don't give it away unless it's like there's a lot of competition. There's this guy who wants to sell as well. So, okay, I'll give him 1 or 2. And then they start going in that ladder. But there's also bad salesmen that you just go and they want to sign the contract, get the quota, and they give the 10% right away. So that's when you start to do a little bit of investigation to see, all right, are we giving too many discounts, for example?
Right.
Or concessions. And then, okay, let's say that, okay, no, well, it's not the problem. Then maybe it's on the cost side. Okay, so you start going into like this breakdown of direct materials, direct labor, and overhead. And you say, okay, my direct labor, for example, how much is 1 hour of work relative to the cost of the car, for example? Or you can start saying, typically the problem is negotiated prices with suppliers. And you say, okay, so give me a list of all the suppliers, all the purchase orders in the past, I don't know, 6 months. And then have we seen prices or our cost increase, right? And is that related because, there's a commodity increase in price for, metal or whatnot? Or is it more about that the supplier is trying to enhance and expand their margin, so they're marking up the price a little bit more to us? So there could be all these reasons, and then within that universe of explanations, you can say, okay, well, this supplier doesn't, work anymore for us, so we have to negotiate a different contract with another supplier who might be cheaper. So then you open like this, let's say, supplier, choice kind of process where they kind of do a bid and then you assign the contract. I mean, it could be overhead, but that's typically not the case, because then you would go into more conversations around, all right, is this building too expensive? Is the rent too expensive? So we need to move buildings. That's a more complex, conversation. But yeah, I think it would start there. So yeah, it's more about poking and asking the right questions. And I think, to be very, let's say, honest with you, I think that for a finance person to ask those types of questions effectively, that finance person has to spend a lot of time with the business to understand the business model and all the levers that they can play. So that's probably the key, that you need to understand the business really well so that you can ask the right questions and you can start pushing the other departments on like, hey, your cost is too high. It's because of this. And that's where the power of data starts to help
emerge from that.
Yeah.
Which I want to dive into. But before we do, there's I've always been fascinated by the concept of unintended consequences in economics. It's just, you do one small little thing and you get an incentive wrong, and all of a sudden people are behaving wildly different.
Yep.
And I'm just curious, like in your line of work, how often does that type of analysis come up?
Oh, every quarter. I think, so I would say maybe officially every year, because you look at, okay, typically at the beginning of the year, you set up a process where you say, this is how I'm going to compensate the sellers, right? And for, it can be from a small company or a big company, but in a big company, you typically have, I remember in Microsoft, you had so many product lines, right? So then you compensate the sellers, right? You're going to sell X amount of Microsoft 365 and this much of Dynamics, and then they have different multipliers for them to get paid. And then that creates behavior, right? Because if they say, well, if I sell this product, I get a 2x multiplier, but if I sell this one, well, I just get like 0.5. So I'm not going to sell this one. I'm going to sell the other one. And that's when you start getting into all these conversations, because it can start to clash with the strategy of the company. Maybe, a particular product is more important for the company at a strategic level, but the quota system and compensation scheme is not set up the right way to support that strategy, right?
Yeah.
So then that's when you start to ask these questions every year of like, all right, our comp plan was like this, maybe we need to change it, and now it should be like this.
Yeah.
But yeah, it's something that comes every year for sure, and every quarter as well, because then you have all the sellers complaining about, how am I not getting quota or whatever.
So that's really cool. Now, let's dive into some of this data and some of the tech aspects of it, because I can only imagine that, like you said at the top of the show, there's AI pieces, there's tons of different aspects of technology that must completely transform the way that you're doing your work.
Yeah, I think the best in class that I've seen is Microsoft. And again, I'm saying everything it's public here, so it's not, I'm not revealing any trade secrets. But in fact, there's a website called Modern Finance. If you just Google Modern Finance /Microsoft, something like that, you'll see the main page. And what that is that Microsoft was pushing a lot to sell technology to help CFOs.
Okay.
And I think that was really cool, because if you think about the universe of companies that exist, even if they're big in Fortune 500, a lot of them have very archaic processes. They have like old versions of SAP, old versions of Microsoft Office, and a lot of the financial statements are actually, kept in Excel, right? Not even on the right system.
Right.
And what that creates, it creates a lot of problems. But the main problem that creates when there's a lot of legacy systems and manual processes, just that it just takes a lot of time to close the books, number one. And then two, back to our kind of cost discussion, sometimes your cost structure can become very inflated. So you need to hire a bunch of accountants to close the books and figure out what went wrong. And that can happen in a big company or a small company. So I think that when you start looking at these more innovative companies like Microsoft or some of these other new SaaS companies, right? I think that's when they start leveraging all this universe of artificial intelligence, machine learning, anything that has to do with like the data analytics universe, and also automation. So there's this space called RPA, robotic process automation. And there's a very cool company called, I forget the name now. It'll come back to me. But anyways, it's basically automating certain processes. And it's very cool because you get a license, and then let's say the accountant tells you, well, this is what I do. It's kind of like a macro in Excel.
Okay.
This is what I do and visually. And then the guy can actually automate that with the tool by just dragging and dropping. So there's no code.
Okay.
So it just facilitates a lot of, anything that is very repetitive, that tool can UiPath. That's what the company's called. UiPath.
All right.
So yeah, they have like these robots that can automate very simple, repeatable processes. And literally that can save money to a company, because now you're just buying a license. You just need to train a bit the accountant or the financial analyst who's doing the work. And that's it. Like there's no more, okay, I need another person to reconcile this, or So you reduce time, you reduce cost. So that's really cool. That's talking more about, and actually, let me do a parenthesis here. So when people think about finance transformation, one of the first thing that they think is like machine learning and artificial intelligence. In fact, I actually went there straight away, right? But it's actually a journey, right? There's a map on this website on Microsoft. They actually paint a path to get there. And you start with, okay, let's first understand our data. So how do we get one single source of truth? Where can we centralize sales and cost and all these metrics that we need? Once you have all that in a single source of truth, now you can work with that data and then move it, for example, into a data visualization tool like Power BI or Looker. So then you have all these, the power of data at your fingertips. And then not just the finance people have it. Now you can actually democratize the data and share it with, sales or HR. And then now they can make decisions based on that data. So now the whole company has this data culture. And then the last step would be, okay, how do you automate and augment intelligence with machine learning algorithms to grab all that universe of data and help you with a forecast? Because you cannot process everything, right? Typically forecasts are done either on a run rate basis or you grab the top 10 accounts, 80-20, Pareto, things like that. But when you start using these tools that can ingest so much data, so much information, that's when you start getting insights that you wouldn't have caught before.
Right.
So that's really cool.
Yeah. So that's certainly, I would imagine, pretty common at the enterprise scale. Is there any of those types of techniques that are available to people who are running, smaller shops?
So I would say the first thing, so yes. So I think anything that you imagine as a centralizing data or data visualization, yeah, it's available for people. I think when you start moving more into, I would even argue that robotics, process automation also would be there. But once you start moving to like algorithms of machine learning and AI, I think that's more of a,
you need a lot of data.
Yeah. And that's more when you're a mid-cap company that at least you have, 10, 20 products operate in different regions and whatnot. I think for people that are more like a mom and pop shop, it's more about, all right, what are you using to, record your sales and your cost, and where does that reside? Where does that data reside? And then, there's like these, let's say, what we call SMB, like small and medium businesses solutions that people can use. And there's dashboards and whatnot. So it's more like individual software as a service solutions.
Right. And
definitely they can buy a license, even the robotics piece. But I think it's more about the question of, if I was a mom and pop show owner, which I was when I graduated college, I would rather spend that money in, a new sales guy or something than a software for accounting. But yeah, I mean, it's definitely available. And sometimes you have like these free trials where you can try 30 days or whatever. And, it works pretty great. And I think it's also more of getting your feet wet of what's out there.
Right.
And being more savvy and kind of thinking, okay, this is how, because at the end of the day, I think any business will become a data-driven business.
Right.
So trying that out, even if you're a small business, I think it's a good idea.
And what kind of questions would they be able to answer if they tried to use some of these technologies?
For example, sometimes, and let's start with something so simple like Excel. Excel is such an underrated tool. Because most people see it as a spreadsheet just for like, a table and maybe the occasional chart.
Right.
But it has so much potential of giving you insights, because if you know how to really create charts, for example, or a macro or things like that, you can save a lot of time, and then you can correlate different data points. So not just financial data, but for example, you could go to operations or for example, the marketing team. That's one thing that I used to love to do, because you get marketing data, which, for example, customer touch points, pipeline, or kind of like how the funnel goes through, and they pace all this in like efficacy of marketing campaigns and things like that. And then you can map it to a customer, so you can kind of things that I remember that I did when I was an analyst is okay, I map out in a chart my revenue line, like by month. And I see, okay, I did, I don't know, $500,000 in January, $1 million in February. And then I see how many active campaigns did I have to generate $1 of revenue. And then you would say, okay, 3, 4, 5. And then you can start seeing trends, right? You can start seeing, okay, wow, it's interesting. I generate the same amount of revenue, but I actually cut a campaign this quarter or this month. But then you start questioning, oh, okay, maybe I didn't need that. And then you start segmenting, right? You can start segmenting, okay, this campaign was for this type of industry or this type of product, and it didn't give me any money. So maybe I should take it out, kill it, and use that money for those campaigns that are actually generating money.
Right.
Then you start pumping more money on that campaign, and then you start, unleashing more revenue generation power. So I think that's a cool use of, start to combine data points from different functions to get different insights. So I think that's something that definitely can be done in Excel without even going further into a high-tech solution.
Into something really robust. Yeah.
Mm-hmm.
Yeah. Cool. Well, what I like to do is kind of wrap up the show with 3 sort of actionable tactics that people listening can use on a daily basis. So if you were to, wrap up everything that you were talking about, what are the 3 things that come to mind for you?
Yeah, I think the first one would be learn a little bit about finance. If you're a business owner or you work in a big company, even if you're not, especially if you're not in the finance function, right? I hope that if you are in the finance function, you actually know finance. But I read a very good book when I was, so after university. One of the things that I struggled was to explain financial results to people that are not in finance, right? Because you have so many metrics and you have so many things that are complex that someone in sales or someone in manufacturing will never understand or might actually not even care about, right? So there was this book called Financial Intelligence, and the authors are Karen Berman and Joe Knight. And the book is literally a guide of what the numbers mean for non-finance managers.
Oh,
so I think if anybody reads that, it's literally like a dummy's version of all of this stuff, like income statement, balance sheet, cash flow.
That's awesome.
And even like metrics, like, if you want to, what is a return on equity or return on assets or, inventory, turnover ratio or whatever, right? So like all these things that are, and then I think it even breaks it apart of, okay, if you're a manufacturing manager, what type of stuff that you should be asking your finance person about.
Okay.
So I think I would start there. And then there's now like a bunch of courses now on Udemy or LinkedIn Learning about finance. So I would also start there. The other thing is if you work in a different function, so if you're in marketing, sales, HR, whatever, and you work in a company, you definitely need to get close with your finance person or accountant, because they can tell you, first of all, they can generate a bunch of data for you that can help you make decisions. And nothing beats having the data at your fingertips. So if, I can give you many examples of functions that you wouldn't even dream of that would work with finance. For example, human resources, besides payroll, you think, well, what else? And there's a ton of stuff, right? Like you can pull, okay, which people are, in a manufacturing context or a services context, which people are utilized, which people are actually putting in the right amount of hours to generate revenue. That's their job. Or you could even give metrics like, how is vacation time or paid time off affecting my revenue generation activities, right? For example, in Europe, you have a lot of these PTOs in August or July when people are like, oh man, like why is my revenue down? If you're sitting in, for example, in California or Seattle in the headquarters, why is my revenue down? You're like, well,
right.
You have to understand the cultural complexity in Europe that, it's off, right? In July and August, it's off. So you're going to see a revenue drop. If you work in, for example, in the sales department in retail, it's so useful to understand why is your sales peaking in a given month, right? If you're in retail, you know that Thanksgiving, Black Friday, like the Christmas, right? It's just gonna, blow out of the water the sales number. So it's important to understand, okay, is it because I had more customers? Is it because I had one customer that just kind of drove? And I remember an example in Amazon was, I think it was someone that bought like most of the inventory of Toys R Us to sell it in the Amazon store. So, like imagine buying the whole Toys R Us inventory to sell it. So that's kind of like a big one-off.
Right.
And then I think the last thing, start to get into tech trends of finance, especially if it's someone who works in finance or wants to develop a career in finance. Start getting into, what are these tools like robotics, machine learning, SQL, for example. It's super important, especially in tech companies like Google, Microsoft, Amazon, Uber. They will all ask you, hey, do you know how to code SQL? Because they want you to go into, so actually in Google, there's this culture of like everybody's a coder. Right. So when I arrived, I didn't know SQL, right? So they get you in this culture of like, all right, you need to learn how to code. And it's useful because then you can manipulate data better. And for example, one of my biggest frustrations was when an Excel file would crash. And now with SQL, now you can say, all right, I want it like this and like this. So the data becomes a lot leaner, right? So you can export a table. And yeah, so I would say start learning about technology. So those would be my 3 things. Read, understand a little bit of financial literacy, talk to your accountant or finance person, and then start getting into the tech trends of finance.
That's awesome. So if people want to find out more about you and what you're up to, where would you send them?
Yeah, so right now I'm very active on Twitter. So my handle is @theAntonioReza. And you can probably find, I also same handle for LinkedIn. So I also write there. But those two are the places where you can find me.
Hey, thanks so much for being a part of the show today. Now, the worst thing we can do is let all this wisdom pass us by and not act on it. There's so much more to the show, but you'd be missing out if you don't subscribe to the newsletter. This is where you start to leverage these tactics that you've heard in the show in a very real way. So go to leverage3podcast.com and you can join right there on the homepage. Also, please feel free to reach out to me on Twitter where I'm @Craig Shoemaker. I'd love to hear from you. I hope you have a great day. Find someone to love, find someone to forgive, and find someone to encourage today. Thanks again, and I'll see you here again soon on the Leverage 3 podcast.